This is going to be India's decade. That is the hypothesis that Morgan Stanley sets out in its blue paper. It says that India is set to become the world's third largest economy by 2031 and also the third biggest stock market before the next decade. Well, to take us through the assumptions made, the projections and the forecasts put forward in this research paper, joining us now is Ridham Desai, Head of India Equity Research and India Equity Strategist at Morgan Stanley. There are several factors, several reasons why Morgan Stanley believes that this is going to be India's decade for the taking. Chief among them are the fact that we are, of course, going to enjoy the demographic dividend, the demographic advantage, which, of course, has been something that we've been talking about. The other trends are, of course, decarbonization, deglobalization, and digitalization. So those 4 Ds is what Morgan Stanley believes will be the pillars on which the Indian economy is poised to grow and, in their words, see a seminal shift over the next decade. Let me just take you through some of the key assumptions that Morgan Stanley is putting forward in its report. Morgan Stanley believes that India's GDP is likely to surpass $7.5 trillion by 2031. That is more than double the current levels, making it the third largest economy, and add about $500 billion per annum on an incremental basis over the decade. Joining me now to talk about why he believes that this is India's decade for the taking is Ridham Desai of Morgan Stanley. Ridham, many thanks for joining us here on The Record. Always a pleasure. Appreciate you joining us. You know, over the last 12 months and more importantly, over the last few months, I've had several conversations with CEOs, both global and domestic, who believe that this is not just India's decade, but perhaps could even be India's century. I won't go as far as that. Let's stick with India's decade for the taking. Just 24 hours ago, the CEO of HSBC India, Hitendra Dave, said that this is our decade to use or lose. You believe that this is going to be our decade to use, Ridham. Let's understand from you what makes you as bullish as you are this time around.
Hey, Shireen, thank you so much for having me. So I call this, it's a quintessential self-help story. India is helping itself probably dominate the world. It's already hazardous to forecast a decade, so I wouldn't go beyond that. But I think India has done a lot of heavy lifting over the past few years, especially over the last 4 or 5 years. And we did get interrupted by COVID, but we're now coming out of that, and all the labor that we put in terms of policy and other things are now bearing, I think, fruit. There are also a few things happening globally that are helping us. So it seems like a sweet spot for India. In fact, as we highlight in the report, stunningly, India could account for 20% of the growth that the world will generate over the next 10 years. So it's a very, very big shift. India has grown quite well over the past few years, but its share in the global economy is changing in a very dramatic fashion. In fact, as you mentioned, 3.5 trillion going to over 7.5 trillion, which means to date, over 100 years, we've added $3.5 trillion to our GDP. In the next 10 years, we'll add more than that. So imagine what that change is going to bring about. So lots of things happening. If I were to summarize it, I think there are 3 big pillars to these shifts that are taking place. One is offshoring, which is essentially India is becoming the office to the world and incrementally the factory to the world. So we're kind of benefiting from what the Morgan Stanley view is the multipolar world thesis. We're moving away from a bipolar world, which is dominated by the US and China. And India is eating away into China's share of manufacturing, helped by the government's production-linked incentive schemes, as well as the corporate tax cuts that happened in 2019. We have a proprietary MNC sentiment indicator, which is at all-time highs. And it's at all-time highs even relative to China. So, just concurring with your conversations with MNCs, even on a quantitative basis, it seems like several boards across the world are all prepped up to invest in India. And office to the world is a theme that has actually emerged post-COVID. So it's a silver lining to what was a pretty big human disaster, that CEOs suddenly learned that working from home is okay. And if you're working from home, you might as well work from Mumbai. It's a whole lot cheaper than working from Florida. And that is why jobs are being shipped into India. So offshoring is one big theme. The second big theme is India Stack. I loosely call it India's version of grid, with the difference that it's actually a public utility. So anybody, you, I, a corporate, a telewala can build an API on top of it and deliver services to consumers. And the third big change is the energy thing. We have managed to provide access to over 600,000 villages in terms of electricity, and that's going to lead to a big change in energy consumption. Just for the statistic here, India currently consumes 800 watts per person per day. The comparison with the US is the US does 9,000 watts. Now, 800 in our view is going up to 1450. And the big story here is that bulk of this will come from renewable sources. So the age-old problem that India had when oil prices went up, our macro always had a problem. That problem will wane in the future. So a lot of changes happening. And this is what makes us very bullish on India. And if you'll notice that most of these are India-led changes. We are making these changes to our macro, to our economic systems.
I'm glad that you ended on that comment, Ridham, because you preempted my question in many ways, because you started by saying that this is a quintessential India self-help story. And what I wanted to delve a little deeper with you was how much of what you're projecting is based on the moves that India itself is making, i.e. what India is getting right, versus what the world is getting wrong at this point in time.
So actually, I think 3 out of 4 are India related. The fact that we are a signatory to the Paris Accord, that's an India initiative, that we're committed to net zero, that we've got major renewable plans set up for the next 10 years. I think the Prime Minister has mentioned this many, many times, 500 gigawatts. We may or may not get to that exact number, but that's going to completely alter our energy supply chains. So that's all India related. The second India related thing is Aadhaar and India Stack. Nandan Nilekani, when he framed this 10 or 12 years ago, nobody thought it would be so potent as it is now appearing to be. It has revolutionized the way India invests, the way India makes payments, the way India stores documents. It's now going to change the way India spends money. It's going to change the way India lends money, and it's going to change the way India insures. So major changes. These are all idiosyncratic. Nobody else in the world has got this system. And the third big change which India is engineering is with respect to its policy. We made those choices in 2019. We decided that corporate tax rates need to be lower. We decided that we want to incentivize capex. We put out production-linked incentive schemes and a slew of other things that the government has done in order to boost the investment environment. So these three are India-related. The only thing that's coming from outside is the shifts in geopolitics and the shifts in what was a bipolar world, and that's happening because of China plus one or Europe plus one. So that we don't control, but 3 out of the 4 factors that are driving this are India.
Well, speaking of India, Ridham, and I know that a lot of people are going to be wanting to hear what you have to say as far as the stock market story is concerned. So let me get you to delve a little deeper on that. In the report, you talk about a quintupling of stock market investors from the current 62 million up to about 300 million. And that, in a way, captures the mood across equity markets and the momentum that's been built around the equity culture. Why talk about the decade? Let's get you to talk about when you believe we're going to be at the all-time highs. The expectation is anytime soon.
Yeah, Shireen, actually, I hate to go into these all-time high things, but yeah, we are not very far away. I think it depends on what the US markets do. Even though we have kind of decoupled, as we have seen over the past several months, the fact is that the US is still the largest stock market in the world, and it seems to be forming a bottom. If it does form a durable bottom, then I think we will make a new high. That's still to be seen. It's not our central case because the US is still struggling with inflation and with earnings. Very unlike India. India is not struggling with these things. So that's why India has done so well. I mean, just digest this number. This year, India has outperformed emerging markets by 34 percentage points. It's not happened ever before, this type of outperformance. it's really a very, very broken denominator. Emerging markets around the world are really broken. And India is therefore looking so good on a relative basis. But on an absolute basis, the market has not really gone anywhere. We've been digesting, the earnings. We've been digesting what was a relatively high P ratio, and things are, settling down. So it's been a typical consolidation, very, I would say, very benign consolidation. It could have been a far more volatile consolidation, but it's been a benign one. So I think we're prepping it up. I think 2023 looks like it will be a much better year for absolute returns. So yeah, let's look forward to that, and hopefully we can make a new high soon.
Yes, that is the expectation, and that certainly is the hope at this point in time. But, you talked about the benign consolidation, Ridham, and while you've just outlined your bull case for India over the next decade, as far as the markets are concerned, outside of the external factors like what the Fed is likely to do, and we will know later tonight, but what could be the near-term triggers as far as our markets are concerned?
I think one of the things that, again, as I said, the near-term triggers are probably lying in the U.S. rather than in India. So one thing we need the Fed to articulate that they think inflation is peaking, which is what I think is happening in the U.S. And if they think that inflation is peaking, then a lot of the bond market losses in the U.S. will start reversing, and that will then feed itself into the equity markets. The next thing, of course, is what happens to US earnings, which will probably be quite bad over the next several months. Back in India, I think we'll focus on the earnings season. I think the earnings season is going to be one trigger to watch out for. We have our own central bank, which has still a little bit of way to go before rates stabilize. So that's another thing that we'll be looking at. I'll be looking closely at commodity prices as well, because it doesn't look like the Russia-Ukraine war is yet settled, and it may be a source of bad news. So we have to keep an eye on that. Fertilizer subsidies in India have gone up significantly this year, and the underlying assumption is this will roll back next year. So keep an eye on that. Ammonia plants across Europe have been shutting down because gas prices are too rich. So we need to see those things come back and fertilizer prices to settle lower. That'll be good for our macro. And then, of course, we'll watch for how investments shape up. Because, Shireen, at the end of the day, to get a durable earnings cycle, which is what we are forecasting for India, needs a lot higher investment rate. And it requires corporate optimism. Now, I'm sensing that companies in India are getting more optimistic. They are starting to run into some capacity constraints. And therefore, there should be a pretty good capex cycle in the next 2-3 years. And that will be great for earnings. So that's something that we'll watch out for as well.
Yeah, and that wait has been on for a while now, Ridham, in terms of the private capex cycle turning, and it currently continues to still be the government that is driving capex. So we will have to wait to see, as you point out, perhaps over the next 2 to 3 years. But I want to focus a little bit on the manufacturing story, because that is something that you feel particularly confident about. We were stuck for over a decade, at about that 11 to 12% percentage of GDP as far as manufacturing share is concerned. Currently at about 15%. You believe that we have the potential and the ability to go to about 20% over the next decade, in light of the many factors that you've just spoken of, including, of course, the multipolar thesis playing itself out in the China plus one advantage being enjoyed by us. How confident do you feel of being able to break out of this manufacturing range that we've been stuck in for over a decade plus?
Actually, Shireen, manufacturing share in GDP has been declining for 3 decades now. So it's not just the last 10 years. In fact, it's ironical that in 1991, what was dismantled was all the constraints on the industrial sector. All the reforms surrounded the industrial sector, whether it was relating to pricing, capacity approvals, supply of resources, etc. Ironically, it's the share of the industrial sector that actually declined. I think there were many constraints on the ground. And, we used to joke about this several years ago, that it was cheaper to import steel from Russia than bring it from Jharkhand to Mumbai. And that was, the basis of the problem, which is that we just didn't have a competitive logistics cost. Now, I think that has gone through a big change over the last few years. Infrastructure has been put in place. There's a huge focus on logistics, and therefore it has become more competitive. Of course, there are constraints in China as well, which is feeding into this story. But I think India is set to now become a meaningful part of the global supply chain. And a lot of companies will reveal this to you that they're receiving orders. Hitherto, they didn't have access to those orders because Chinese companies used to take those orders, and they are now all set to increase capacity to service these export orders. On top of this, multinational companies are looking at India as a very attractive destination. A, to obviously put up low cost manufacturing. Our labor costs are less than China now. That wasn't the case 10 years ago or even 5 years ago. So now we're lower than China. And B, because we have a serviceable home market. Look at mobile phones. We are very big consumers of mobile phones. So it makes a lot of commercial sense to set up capacity in India, service that market, and then take the excess production and put it out of India. So I see this. These are the changes which inspire us to believe that manufacturing is now set to gain share in GDP over the next 10 years.
Ridham, we are going to take a break, but don't go anywhere. We return with Morgan Stanley's Ridham Desai on why he believes this is going to be India's decade.